Meantime, Ford's moving lower in the pre-market despite this quarterly beat. The automakers are suspending full-year guidance in the wake of all this tariff uncertainty. Let's get to Phil LeBeau, who talked to Jim Farley this morning. Phil, fascinating to hear Farley tell you that he fully expects these tariffs to be in place for the next 3 years.
He's coming out and saying what most people in the auto industry have come to the conclusion of, which is it ain't changing anytime soon. And if you're thinking, well, let's kick it down the road to the fall, to the maybe winter, and then perhaps the Trump administration will decide, tariffs, who needs them anymore? That's not the thought process within the auto industry. Here's the first quarter for Ford. They did beat on the top and the bottom line, but keep in mind, the estimates have been brought down dramatically. Net profits down 64% compared to the first quarter of last year. And as you mentioned, the company has suspended its full-year guidance. In terms of dollars and cents, even with offsets of $1 billion, that's steps that Ford has taken to offset the impact of tariffs of $1 billion. As you take a look at shares of Ford, part of the reason it's under pressure is because the company has said, we're going to see a hit of $1.5 billion this year. Here's Jim Farley talking about how they're managing this and their expectation for the permanency of these tariffs.
We do, at least for the next 3 years. So we think it's, a significant issue for the company. The good news is we build 80% of our vehicles in the U.S., so we're the least affected and the most able to absorb them. But they are significant for our company, and we're doing everything we can to mitigate them. There's a lot of things that are still unclear, and that's why we suspended guidance.
One of the things that Ford is looking at is evaluating its manufacturing footprint. Now, they have not announced moving any products or plants from foreign locations here to the United States, but they are analyzing everything in terms of what makes the most sense. We talked about the Maverick this morning with Jim Farley. Very popular vehicle. It's a mid-sized pickup truck that is selling for around $30,000. They build it in Mexico. Could they build it back here? Yeah, but it wouldn't cost $30,000. So that's part of what they're doing. Remember, Ford has 2 plants being built here in the U.S. They'll come online over the next couple of years. But in the meantime, guys, what Jim Farley is saying is what we increasingly hear, at least not on camera, but off camera, from those within the auto industry. These tariffs are here to stay.
Interesting, Phil. That price tag that they put on the tariff headwind, obviously a lot lower than the one we got out of GM. We think that sort of correlates with their mix of foreign and domestic content?
Correct, because they build so much here in the United States, and 80% of their manufacturing is here. Now, they still bring in non-U.S. supply. And that content, those components, some of that they can offset, but they're still going to feel an impact, and there's your $1.5 billion.
Meantime, I don't know, are you watching these Tesla sales numbers for April out of Europe, Phil? I mean,
yes.
We knew March was bad.
They're terrible.
Sweden down 80, Denmark down 67, France down 60.
And this is at a time when Europe is pivoting towards electric vehicles. Because of incentives to meet certain rules when it comes to emissions. So at a time when the continent is pivoting that way, Ford's year-over-year sales are falling. Some of that is the automakers in Europe, the established ones, have rolled out new EVs. Some of that is also because of the Chinese automakers. Europe is where they are going to town in terms of expansion, especially with lower-priced models. Those lower-priced electric vehicles from China, I mean, that's going to be it's an issue for Tesla right now in Europe. It'll be an issue for all automakers over there. That's part of the reason why the EU is in talks with China about figuring out some way of allowing the Chinese to sell within Europe, but not to undercut everybody as much as they are.
Right. That's a concern for Europe in many different sectors, not just cars. The flood of capacity and the stuff that has to go somewhere.
Yep.
Phil, busy day for you again. I appreciate it, Phil LeBeau.